All right, we're going full tension, newsroom cadence, zero fluff. Here's your complete script. Prompter ready, dynamic, escalating, built for retention. If this deal collapses, it's not just about energy, it's about power, it's about leverage, and it's about whether Donald Trump just miscalculated against Canada's new political heavyweight. Because Mark Carney didn't blink, he shut it down. And now, an $865 billion energy framework, years in the making, is hanging by a thread. Let's break this down. This story begins with an ultimatum. Sources close to the negotiations say Trump demanded major concessions on pricing, pipeline prioritization, and export routing, essentially forcing Canada to align its long term energy infrastructure with U.S. strategic interests. On paper, it looked like hardball negotiation. In reality, it may have triggered a geopolitical standoff. And at the center of it, Mark Carney, former governor of the Bank of Canada, former governor of the Bank of England, a man who built his reputation navigating financial crises, not folding under pressure. So when Trump issued what insiders described as a take it or leave it energy ultimatum, Carney's response was immediate. No, no rushed signatures, no emergency compromise, no quiet concession behind closed doors. Instead, Ottawa signaled it was prepared to walk away from what could have been the largest North American energy integration deal in decades. Now, let's understand why this matters. The $865 billion figure isn't random. It reflects projected infrastructure investment, cross border energy transport, LNG expansion, and long term supply guarantees stretching into the 2040s. This wasn't just oil and gas. This included renewables, grid modernization, and critical mineral coordination tied to battery supply chains. In other words, energy security for the next generation, and suddenly it's unstable. So, what went wrong? According to policy analysts, Trump's team wanted stronger U.S. dominance over pricing structures and priority access clauses, especially in the event of global supply disruptions. Think Ukraine style shockwaves. Think Middle East volatility. Washington wanted first call. Canada saw that as a sovereignty issue. Carney framed it carefully. He didn't attack Trump publicly. He didn't escalate rhetorically. He simply reiterated that Canadian energy policy would not be dictated by external political timelines. Translation: no ultimatums. And here's where it gets strategic. Canada is not negotiating from weakness. It sits on the world's third largest proven oil reserves. It's a top uranium supplier. It's emerging as a critical minerals powerhouse for EV production, and global demand for stable democratic energy partners has never been higher. Europe is watching, Asia is watching. So when Trump pushed, Carney calculated the risk. Walking away might hurt in the short term, but capitulating could redefine Canada's leverage for decades. Now zoom out. This isn't just a business dispute. It's about how North America positions itself in an increasingly fractured global energy market. After the war in Ukraine, energy became weaponized. After tensions in the Middle East escalated, supply risk became political risk. The U.S. wants security. Canada wants autonomy. And the timing makes this explosive. Because Trump is campaigning on strength, on negotiation dominance, on America First energy leverage. But if this deal collapses entirely, critics will argue he overplayed his hand. Supporters will argue he stood firm. Markets? They hate uncertainty. Energy stocks reacted cautiously. Infrastructure planners paused feasibility assessments. Investors began asking the obvious question: Is North American energy coordination entering a more nationalist phase? And then there's the diplomatic ripple effect. If Canada pivots even slightly toward diversified export partners, if LNG terminals accelerate westbound shipments to Asia, if European long term contracts expand, Washington loses exclusivity. That's leverage lost. But here's the other side. Some analysts believe this is negotiation theater, a high stakes standoff designed to extract final concessions before an eventual compromise. Energy megadeals rarely move in straight lines. They stall, they fracture, they get renegotiated. But the tone matters, and the tone right now is colder than expected. Carney's posture signals institutional confidence. Trump's posture signals political resolve. The collision is structural. Now let's address the economic implications. If the deal collapses entirely, cross-border pipeline expansion could slow. Joint grid resilience projects may be delayed. Critical mineral integration for EV supply chains could become fragmented. That affects manufacturing costs. That affects energy prices. That affects inflation dynamics on both sides of the border. And in an election cycle, that's dangerous territory because energy prices are never just numbers. They're voter sentiment, their gas station optics, their utility bills landing in mailboxes, and neither side wants to appear responsible for higher costs. So what happens next? There are three possible paths. First, quiet renegotiation, back-channel diplomacy, technical adjustments, public toughness, private compromise. Second, partial collapse. Energy cooperation continues but scaled back. Selective agreements instead of one mega framework. Third, full fracture. Canada diversifies aggressively. The U.S. doubles down domestically. North American integration slows dramatically. Right now, it's too early to declare a definitive outcome. But one thing is clear. Carney did not respond like a subordinate partner. He responded like the leader of a sovereign energy superpower. And that shift, psychologically, changes the dynamic. For years, US-Canada energy relations operated under predictable alignment. This moment challenges that assumption. If you're watching global markets, this isn't noise, it's a signal. A signal that even allied economies are recalibrating power balances in a more volatile world. And in that world, ultimatums don't always produce submission. Sometimes they produce resistance. The question now isn't just whether the $865 billion deal survives. It's whether this confrontation marks a deeper turning point in North American strategy. Did Trump apply pressure at the wrong moment? Or is this the opening move in a larger negotiation playbook? And is Carney protecting Canadian leverage or risking economic opportunity? This isn't settled, but it is consequential. Because when energy deals shake, markets move. When markets move, politics follows. And when politics escalates during an election cycle, everything becomes amplified. Watch the next statements carefully. Watch the language. Watch whether the word framework becomes review. Watch whether review becomes pause. That's how mega deals die. Quietly, technically, incrementally. Or watch for the handshake photo, the revised terms, the strategic victory narrative on both sides. Because in geopolitics, collapse and compromise sometimes look identical until the fine print emerges. For now, one fact stands. Carney didn't fold, Trump didn't retreat, and $865 billion worth of North American energy strategy is caught in the middle. This is bigger than a headline. This is leverage in motion. Stay alert. Because the next move won't just shape energy markets, it could redefine who holds the negotiating advantage in North America for the next decade.